Good afternoon, everyone. A very warm welcome to today's live webinar. And we're thrilled to have you with us. It's now noon, and once again, we've got another dynamic and insightful session lined up for you today. I'm Neil Peterson. I'll be your host and moderator, and it's a pleasure to guide you through our discussion on a topic that is top of mind for many in the industry. So today we'll dive into the South African property market outlook for 2025. We'll look at trends, challenges, and opportunities. And joining me are three leading experts in the property space who I'll be introducing very shortly. So today's event is brought to you by Real Estate Investor, and since 2007, REI has proudly served as South Africa's leading independent platform for real estate news, investing insights, and property education, and through our award-winning monthly magazine, Real Estate Investor Mag, our digital platform, rei.co.za, and our regular live and virtual events just like this one. And we're on a mission to empower investors, homeowners, landlords, and property professionals with the knowledge they need to succeed. So some quick reminders for our audience. If you've registered, no worries. You'll receive a link to the full webinar recording shortly after the event. It'll also be available on our homepage at rei.co.za. Q&As, yes, we want this session to be as interactive as possible. So feel free to submit your questions anytime via the Q&A box at the bottom of your screen, and we'll get to as many as we can during the dedicated Q&A segment at the end. So moving on to today's discussion, we've seen the African real estate market shifting rapidly, driven by factors like interest rate shifts, record-breaking house price growth, evolving demographics, and emerging technologies. We've also seen many local and global economic challenges, such as announcement of new laws on property rights, a pending VAT increase, pending trade tariff increases, general inflation, and thrown in with lots of political and economic uncertainty. But whether you're buying, selling, investing, or operating in the industry, this session will give you expert insights into the trends shaping 2025 and beyond. So without further delay, I'm excited to introduce our esteemed panel of experts, each of whom will provide valuable insights in today's discussions. So I'm delighted to introduce, first up, we have Estiani March. She's Business Development Executive at Lightstone Property, one of South Africa's leading providers of property data, valuations, and market intelligence. Estiani, great to have you with us again. Please go ahead and introduce yourself to the audience.
Awesome. Thank you, Neil. Thanks for having me. Sure. Yeah, what a journey. I think I started my real estate journey also about 22 odd years ago, the last 9 of which I spent at Lightstone. So I think, as you've rightly said, there's been some very interesting changes in the market. It's always a cycle. So yeah, looking forward to just jumping into some trends and see what's happening, where we're heading.
Wonderful. We look forward to that, Estiani. And we're also joined by Paul Stevens. He's CEO of Just Property Group. Paul leads an expansive and growing network of property franchises, both locally and internationally. Paul, welcome. Please tell us a little bit about your role.
Hi, Neil. Thank you very much for the invite, and wonderful to be with you and the panelists today and to hopefully be able to share some insight. I've been in the property industry and with Just Property in various roles for 22 years, so similar to Estiani. I think you can see the effect of the property market on one as one ages, but really excited about the prospects that lay ahead. I think we're in unprecedented times, and it's going to be great to chat a little bit today about what we see unfolding in the year ahead.
Absolutely. Great having you on board here today, Paul. And last but no means least, we have here Msika. He's the CEO of Private Property, a leading online property portal connecting millions of South Africans with property listings and insights. Theo, thank you for joining us today. Please take a moment to introduce yourself.
Thanks, Neil. Thanks for having me. I'm very excited to be part of this panel. I've been in real estate, or the technology side of real estate, for the better part of 24 years. You can see the gray starting to come through too on my side. So Paul, you're not alone there. Yeah, it's exciting from our point of view. With private property, we are doing our best to ensure and empower the industry and ensure access across the board. And today's topic is one of interest for us. It's an important topic to debate. So thanks for having me again.
Absolute pleasure. Wonderful having you here. And Estiani, let's start off with you. I mean, you've got some really valuable data and insights, and we want you to just set the scene, take us through what are the numbers are saying just to kick off today's session. So I'm going to hand over to you now.
Awesome. Thank you so much, Neil. Alrighty, let's see. Let me just bring that up. So if you can just give me a thumbs up if you can see the slides. Awesome.
All good.
All right. So first of all, I thought let us have a look at what's been happening in the real estate market in terms of volumes of properties that have sold nationally over the last 10 years. Obviously, we'll understand and recall the 2020 year, which was the COVID year, where there was some months where no transactions were happening. So naturally, we would have seen a dip there. But I think the numbers did speak very loudly in 2021, 2022, where we saw really great numbers of sales coming through, over the last, was more than over the last 10 years going back from then. However, with the rising interest rates and all of the things that you've mentioned now before, we did see quite a bit of a dip in 2023. 2024, so last year didn't end that bad. We did manage to exceed slightly on what we had ended on in 2023, but I think there was still a lot of uncertainty in the market. So without, discrediting what has happened over the last year, we do also see that, which I think for me is a very, very positive indicator in the market, that yes, the volumes may have dropped, 2023, 2024. But what we did see is that the value in real estate kept on increasing. Now, there's areas, and I'll show some of the slides a little bit later, that indicate some areas may not really perform as well as others. But on a national level, we do still see that the values are increasing annually. So that is phenomenal. We also looked at the different sales volumes across provinces, and naturally we'll see that Gauteng does have majority of the sales, because also that is where majority of the properties are based within the country. But second to the Gauteng, with obviously the highest volumes of sales, we have our Western Cape. So Western Cape also naturally have the second most largest number of properties, but also then sales. And thirdly, then your KwaZulu-Natal areas. We also broken that down just a little bit deeper into looking at the three major provinces, just to see, what the landscape looks like in that instance. So you can see the trend holds throughout the last 10 years, not much change in terms of the dynamics between the three bigger provinces. So Gauteng still naturally the leader there in terms of volumes. And then second to that, Western Cape, and then KZN. What is interesting, though, and I think this was also something that we will talk about today, is it's kind of a shift in terms of your demographics for both buyers and sellers. So in this specific slide, we're looking at the age of buyers. So here you can actually see that about 10 years ago, we had seen that our buyers were almost like in your mid-20s to your early 30s, where majority of the buyers were at that time of their lives. But 10 years later, so currently we're looking at a buyer's profile that is quite different from what it was 10 years ago. So a little bit more of a spread, but also a little bit more of an older generation, let me call it generation or demographic in terms of your buyer's profile. Similar to that is the sellers. So again, 10 years ago, the seller profile was a little bit different. So we had younger sellers, so mid-30s, early 40s. Now we have a very much of a spread between your mid-30s up until almost your late 60s, where people then sell off. And this is a very interesting phenomenon, which can also be seen in the next slide, which actually shows that people within the country, and it's countrywide. So the first bar there, you'll see it's actually on a national level, are really holding on to their properties much longer than they were 10 years ago. So the data here shows that in 2014, the average for people holding on to their properties was around about 6, 7, maybe 8 years, where currently we're sitting on an average of almost 12 years that people are holding on to their properties. So I think that also naturally speaks to the lower volumes of properties transacting in the market, because there's not a lot of properties being placed on the market as there used to be 10 years ago. We also looked at, what is the landscape in terms of how properties are being financed. So are people actually bonding properties? Are they paying cash? And we can see that in terms of volumes, we're looking at about 50% odd properties in terms of the number of properties that are being bonded. Obviously, the remainder will be people that are acquiring real estate in terms of cash, so cash sales. And if we look at the value in terms of all the transactions happening, it's almost about 50-55% currently that are being bonded. So almost a nice split between cash sales and then people taking out bonds to secure their purchase. You've also spoken about or touched on the inflation of property. So in terms of, or in other words, the rate at which the value or the price point of real estate or properties are increasing over the years. And we'll all recall there was a time, I think it was 2003, 2004, just basically when I entered the market, where you could actually get returns of up to 30-35%. Which meant at the time that, buying a property today, selling the property 3 or 4 months later for 30% profit. But that hasn't been seen for since then. It was a very short-lived period, I think a year and a half. And after that, it has always been around about the 5% mark on average in terms of property inflation. Last year, 2024, we ended on just almost about 3%, if I recall correctly. And it hasn't really risen anywhere above that levels, except for your 2021, 2022 price point, where, as you've seen, all of the demand that have changed over that period, and we can speak about that a little bit later. But we did see a nice increase there. Other than that, flattened down, and there's obviously many reasons for that. And then again, it's on a national level. So there's areas and pockets within the country that are really doing well. And then there's areas that are facing different challenges. So just then, lastly, on that point, where you can see that the national inflation in terms of these different provinces, so the Western Cape is currently sitting on about 5%, which is something that they've withheld for inflation point, which was withheld for quite a long time. Gauteng and your Free State not doing as well as would have wanted or expected. So Gauteng sitting on 1.13%. Which obviously naturally speaks to some level of governance issues in the area. But then Mpumalanga and Limpopo are actually doing very well. So there's a nice overview of what's happening on the provincial level. But again, I think if you go a little bit deeper into specific areas, that's always almost where the golden nugget sits in terms of opportunity within the market. Thank you very much.
Awesome, great. I think
my story.
Wonderful. Thanks, Estiani. I think you set the scene very nicely. I think for a great discussion that we have. I see Paul Thea, you can put on your mics now, because I want to get into this discussion more deep now. It's good news to see values are increasing. That's fantastic. So that's so Paul, I want to first bring you in here. You're in the market, you know what's happening, got loads of agents, internationally, nationally. We've seen record higher price growth recently. Do you think that this trend is sustainable into 2025, or are we heading for a market correction? And maybe just elaborate maybe on some of the regions that are likely to continue outperforming or cooling off.
Thank you, Neil. Have you got me clear?
Yes, absolutely. Yeah.
Neil, I think on the back of what Estiani has showed us, the growth, it hasn't shot the lights out. So it's been sustainable for a number of years. And if we look at the greater economic context of where are we navigating with interest rates, because I think this also has an effect, or is a key effect of this. And we've had a reduction in interest rates last year. And again, we've had a 0.25% in January this year. And I think we all are cautiously optimistic that we could see another reduction potentially from mid-year to the later part of year. I don't think we're going to see the reductions we were all hoping on. So with that, I do feel confident that we're going to continue to see growth, and particularly in the sort of lower price bracket properties. And it is very much area specific. We know that in the Western Cape, in particular, it's shot the lights out. You've had significant growth in areas like the Western Cape, and not just Cape Town, but a lot of the coastal areas, spreading right around the country in the coastal areas, and Semigration's been a big driver of that. So I really feel confident we're still going to see some good growth in the right nodes and in the right type of properties. So again, also in some of the upper valued properties, your estates in particular have continued to see good growth. So I'm very confident we're going to continue to see what we've seen.
Wonderful. Thea, your thoughts around that? What are your thoughts around the markets and the different regions?
I tend to agree with Paul. We will certainly see growth in home prices in South Africa continue. Maybe not as aggressively across the board as it's been in the last little while, but when we look at a global index in terms of housing affordability, South Africa still got the most affordable housing compared to other, let's say, emerging market nations. And as a result of that, I think that our pricing will continue to rise.
Okay, well, that's all good news. And despite, having quite a tumultuous market at the moment, but we won't get into that quite now, because property, we know, is resilient and definitely a long-term game. So, Estiani, I want to bring you in here. I mean, based on the data and the forecasting models that you have, because you're the data queen here. And I mean, how is Semigration continuing to influence regional sales price dynamics and development hotspots? I mean, are we seeing long-term shifts where people choose to live and work?
Immigration sure has been topical for quite some time. And I think after we can all recall, specifically after COVID, there was a big focus around, where are people repositioning themselves now that they have different opportunities, different landscapes in terms of, work-life balance, work from anywhere, those kind of things. And at the time, it was very interesting how there was quite a big drive, towards your coastal area, specifically at the time, the Eastern Cape, which was something that wasn't naturally expected, and also your lifestyle areas such as Mpumalanga and then KZN to an extent. I think that is something that'll always continue. That's just my personal view. It'll always continue because of the aging demographic of our homeowners. So you'll see naturally that the retirement opportunities naturally sits in those areas a little bit, I think, more than within the Gauteng areas per se. So I think that kind of Semigration will probably continue for the next few years. However, what we have also observed, and I think there was quite a few articles that have been released around that, is sort of people returning back to, let's say, an area like Gauteng. And I think there's also various reasons for, such as affordability. So yes, there was a lot of people moving towards the Cape Town area, but it because of that area being very much, I would say, a buyer's market, the property prices are quite high, and people do find it quite difficult to adjust and adapt in that environment, and then naturally will come to an area where it's a little bit more affordable in certain areas. And also, I think the landscape may change in terms of where people can work and live. Seeing a lot of companies recalling people coming back into the office. So yes, I think the landscape will change a little bit in terms of Semigration, but very much also driven, I think, by affordability and accessibility.
Absolutely. Thanks for that. And I think the stats we have, it's around about 100,000 families. We talk Western Cape, includes the George, Mossel Bay area, as well as, other areas of Western Cape, Langebaan. But Paul, I wanted to bring you in here. I mean, you have got a national footprint of agencies. So you can actually see on the ground, I mean, you've got a big rental portfolio, but you've also got sales that's happening. So is that consistent kind of with the data that Estienne has brought up in terms of the demand for both rentals and sales?
100%. Neil, I think if we take data, they say around 70% of people that are moving within their provincial boundaries. So that other 30% that are moving, where they're moving to. And off the back of what Estienne is saying, and I think everyone knows the big movement has been down to the Western Cape and particularly Cape Town. I think the biggest number of that is moving to Cape Town, and that's from Gauteng as a whole. So from Johannesburg and Pretoria down to Cape Town. And if my stats are correct, they say that there's of 32% of people that moved to the Western Cape, 15% of those are moving back out. So where are they moving to? And I think Lightstone might be able to reflect some of that, but a lot of that push is back to Pretoria and back to Gauteng. So a lot of people are moving up there, and then you've got your whatever you might want to call us as secondary cities like George, Port Elizabeth. And I think those type of places, Quebec, are becoming spots where people are relocating to from an affordability perspective. I think this is what you're hearing on the ground as Cape Town has become a very expensive city, not just to live in, but to acquire a property in. So I think we're going to see that semigration to the Cape slow down somewhat, and you are going to still see some people that can't afford to live there anymore starting to relocate to other areas. Even in the likes of Gauteng, where Sandton coming out of the COVID year, where there was a mass movement out of the city centre and they had huge buildings that were standing empty there. There's a big push back into the Sandton area. That's where most of the movement, I think 26% of the movement in Gauteng is into Sandton at the moment. So there's a mass movement into Sandton, which is positive, taking, there's a lot of negativity around Joburg in particular. And I think a lot of news saying that people are moving out, but the reality is there are people moving back, and that's positive.
Absolutely. Theo, you're sitting in Gauteng, but obviously from your portal perspective, what are the trends you're seeing? Is that consistent with what Paul and Estienne are saying in terms of those market movements?
Yeah, we're seeing a demand for urban areas. So I think the back to work movement is kind of maybe pushing that. But definitely over the years, the trend has shifted back towards the major centers. Not saying that, coastal towns and holiday destination towns are not seeing activity. They are. Just the cities are back, if we can call it that way.
No, absolutely. And I mean, what are the trends that you're seeing? I mean, if you start looking at the listings, I mean, is there an increased number of listings in Cape? Is there more properties on the market? Or is there more in Gauteng? And where's the activity that you're picking up? Where is it in which areas?
Yeah, Gauteng has always been a hub with the most listings, right? But in general, we've seen a decline in listings available in the market, actually. So starting from the end of the year, there was a decline of about 9.6% in listings overall.
Wow.
And that's taking its time to come back. So naturally, people don't want, potential buyers walking through their home at Christmas time. So we get that there's a stop of show days and things like that. But we also believe that, some of that speculative stock that was in the market has been withdrawn from the market. There's sellers are a bit cautious at the moment. So the amount of stock coming back into the market has been slower this year than previous years.
Okay, interesting.
That's the same across the board. So Gauteng, Western Cape is actually a little bit more pronounced than Gauteng and KZN as well.
Okay. So Paul, bringing you here, I mean, once again, you're on the ground and you kind of have a good feel. How are estate agencies adapting to changing buyer preferences? I mean, especially, I mean, we talked about live, work, play. People, a lot of them still working remotely, despite people say they're back to work, and it tends to be more in the corporate environment rather than the small business. But what are clients asking for now that they weren't 5 years ago? What's changing in those buyer preferences?
Yeah, Neil, I think off the back of what Theo said, just starting there, I think there is a drawback to the office. I think we need to take note of that this nomad lifestyle and working totally remotely, I think is starting to change, where people are seeing a drop in productivity. So you're hearing that. But if we take this lifestyle sort of driven living, as they call it, the live, work, play developments that are springing up everywhere and becoming a key thing, and what we're hearing on the ground of what tenants are looking for, I think living in a country like South Africa, first and foremost, would be security. Why are we moving into and away from freehold properties? Is first and foremost, I would say, for security reasons and a sense of being in a community. Then, again, living in South Africa, I'd put next on the list is sustainability. So, we're in a country that unfortunately has load shedding, or has had load shedding, as much as it comes and goes a little bit now, and we're not sure what the future holds with that. It has been a threat, and a lot of people have wanted to move into places that are off the grid to a certain extent, from not just an electricity perspective. I think the next threat that we're all facing, despite all the rain that we've had, is water security. And I think that has become another concern for South Africans. So if we can move into developments that offer this type of amenity, I think it's become a very big thing. And even we're talking about the last 5 years, is even internet connection. Wi-Fi connection in these work, live, play communities is something that's a must. So not just for tenants, but certainly for buyers buying into these areas. You want to know that you're not having to travel far to work. Sometimes you can work right there. You've got a coffee shop if you're seeing clients. You've got gyms. You don't need to travel much. You've got your exercise right there. You've got a place where you can have friends around without having to host them in your unit, because the sizes of the places people are moving into are getting smaller and smaller. But I would say those are the key things that we're seeing buyers demanding. And yes, I think whether it's tenants or buyers, people are becoming far more demanding. Information is far more accessible to them, so they know what they're looking for. And and the estate agents, to survive, have had to ensure that they can adapt to that. Today's buyer wants not just a house; they're looking for a lifestyle. I'd put it that way.
Absolutely. No, thank you for sharing that. So Theo, just from a listings and consumer behavior perspective, I mean, what are the trends you're seeing in demand for, if we look at sort of the entry level of affordable housing compared to like the mid and luxury segments? I mean, let's talk about both urban and also outlying areas. I mean, are there any tech tools, innovation making it easier for buyers to find and access these properties on your platform?
Neil, we're seeing a clear and sustained demand for affordable housing, and that's significantly outpacing the mid and luxury segments, particularly in urban peripheries, transit-linked corridors. This demand is being driven by South Africans who are looking for proximity to work opportunities, access to basic services, and better value for money in terms of transport and utility costs. In contrast to the mid and maybe luxury markets, while they're still active, they're showing more selective movement, with buyers prioritizing lifestyle upgrades, as has been mentioned already. Excuse me, and security estates.
Okay.
What particularly is interesting from a consumer behavior standpoint is the intent in the affordable segment. People are spending more time researching, comparing, and verifying the legitimacy of listings. There's a huge hunger for trustworthy information, and that's where technology plays a crucial role. At Private Property, we are actively investing in tools that simplify the search and decision-making process. These include enhanced filters tailored for affordable housing and affordability calculators. We're starting to think about things like virtual tours to reduce the barrier of physical access, and more intuitive mobile experiences that don't use up a lot of data. We're also prioritizing partnerships. There's some guys doing some really interesting technology building for for townships and more affordable areas. And we're looking at integrating and partnering with them to be able to get stock in areas that is not easy for us to reach. So there's a bunch on the go, and we're constantly pushing to bridge the divide and ensure that information is accessible for all segments of the market, and that every South African can find their space through portals such as ours.
Excellent. Thanks for sharing that. Estiani, are there any sort of surprising data points or overlooked areas that you believe are set to become property hotspots in 2025? I mean, are there any insights into emerging markets? I mean, they always land very well with investors most of the time, also home buyers. Any data points that you can share with us?
Sure, I think we all look and search for those golden nuggets all the time, I'm sure.
That's what we got you.
No, definitely. So look, I think if we look at, and I've spoken about that in the beginning, if we look at where the price growth is in certain areas, obviously that's, I think, where people should be looking at, what is happening in that specific area. And one that comes to mind for me at the moment is the Limpopo area, having actually obtained like a better inflation rate even than the Western Cape. So I think naturally those areas people would want to go and understand why, first of all, is it new developments in specific areas? Is it expansions in specific areas? Why would prices in those areas obtain a better growth yield? So that for me is something that I would definitely look at. But also then, and I think Paul's touched on it and Theo's touched on it before, is the low value market. So that has always actually attracted quite great good to great inflation or increases in terms of price points. And if we can segment that together with the fact that there's a reduction in terms of your transfer duties for properties. I think it's now increased to 1.21 million, then naturally that reduces the cost of acquiring real estate in that segment or in that market, which for me would drive, more purchases. But then also, what opportunities would that market provide to, either buyers or sellers? And one of the things that may be something that I'm not saying it's a trend or an emerging market is, what is your rental space looking like, and how is that actually changing in terms of landscape within South Africa to withhold with global trends? So your short-term letting, I think that's something that is actually being looked at the moment. I think it's even going to be legislated, if I'm not mistaken, to some extent. So. And you've mentioned it before, it's the real estate market is very resilient, but I think us as South Africans are also very creative in finding solutions where there is, or opportunities, where there is changes in markets such as what we are currently experiencing. So yes, I would say Limpopo area, maybe just to see what's happening there, some nice volumes of sales happening, and then also the low value market, just to understand that market a little bit better.
No, absolutely. Yeah, I think, look, the biggest challenges, I think, outside of the Western Cape is obviously the municipalities and the delivery of services. And I think that's been some of the challenges that's been affecting a lot of investors, I think, over the years. But we hope to see that change significantly. But we will see, I think, a shift that's going to happen. Interestingly, Professor Francois Veruli says the market in South Africa is R1 million. That's the market you should be looking at. And he says that's the average price, which is very interesting. So, which is a bit of shock therapy for a lot of developers out there who are in the sort of higher end of the market, but where the demand is definitely in that sort of lower end. But thanks for sharing that. I'm going to bring in you, Paul. Let's talk about interest rates. I mean, how do you see lower interest rates in 2025 impacting, when we spoke about the 0.25 coming down, how do you see it impacting buyer behavior, investor confidence? Will this drive more buyers into the market, or will it just inflate prices further?
I think we've already touched on the inflation of the prices, Neil. I do believe we are going to see a continued price inflation across most of the board. But if we look at what I think is significantly going to change and has already started to change is the investor confidence. I do think we're seeing a lot of investors coming back into the market. If you look at the turmoil that's happening in the world markets from an equities perspective, whether it's internationally or globally, there's been a bit of blood on the street, and property is one of those resounding things that if you're in it for the long game, it's going to certainly be something that brings back great returns if it's done in the correct manner. So I think the investor confidence is certainly there. If I just refer to some of the numbers, I mean, we're looking at 12% of purchases that are coming through now are investors. Down in the Western Cape, that number far exceeds that. I think it's close to 31% of home loans that have been approved down in the Western Cape are for investors, which is showing the confidence in that area. And then besides that, Neil, is starting to see first-time buyers come into the market. You know, over the last little period of high interest rates, you know, we had that huge, coming out of COVID, a huge ramp up into 2021 and into 2022 of a lot of first-time buyers coming into the market. Some of them have been put under financial pressure and have started offloading properties over the high interest rate cycle last year. And as interest rates are starting to come down, I think we're starting to see some renewed interest in first-time buyers coming back into the market. And I hope that that's going to continue as we potentially see further reduction later in the year.
Absolutely. No, thanks for sharing that. And I mean, if we talk about the inflation thing, it always is, with property, it's indexed for inflation. So if it goes up or down, it's always going to, in most cases, and particularly in the Western Cape, not in the country, rest of the country, we've seen that it has exceeded a lot of inflation over the years. But yes, so I want to bring you in, Thea. I mean, for just your comments around interest rates and also buy and investor confidence.
Yeah, I think that the interest rates dropping a little bit more would fuel the market a bit more. I think that sellers that are holding on, saying no one's going to buy right now, would probably put their properties on because they'll be looking to buy something else. So yeah, interest rates dropping would be good for the entire industry. And hopefully we see a bigger drop. I'm not sure with everything happening politically globally, whether that's going to happen or not. Hopefully we don't see an interest rate increase, because that could very much happen. But, time tells all.
Absolutely. I think there's all kind of speculation whether it's going to go up or down. And of course, with the whole Trump factor, and we're not going to go down that rabbit hole right now because that could take us in a completely different conversation. But there's even talk currently in the US that interest rates could drop. So, I mean, because Trump has put a pause on the whole tariff thing for 3 months. So we'll just have to see in which direction that goes, because South Africa tends to look at what happens in the US. So I think, Paul, you are a big player in the rental sector. And I mean, you've got a big rental book. And so let's talk a little bit about the rental market, because, I mean, what are the challenges that agents are facing in the rental market? And how are landlords adjusting strategies to stay competitive amid the rising demand, which there is? Is there tech flexible leasing models so that give them an edge? Can you maybe just update us?
Yeah, I think if we just look at the rental market as a whole, Neil, it's been extremely competitive. What we find is in a high interest rate environment, from an agency perspective, there's this big shift towards doing rentals. So extreme competition. It's been a wonderful environment that we've been in. We've seen great stability with vacancy rates below 6%, I think hovering around 5.5%. So that showed investors a lot of confidence. We've also seen rental escalations start to come in. So, best that we've seen, I think it was also sitting close to 5.2%, so close to the 5.5 in vacancies, which is the best that we've seen since 2016. So things are looking very, very positive, considering the environment we're in. But what are the biggest challenges that we all face, whether you're a private landlord or an agency, is the affordability that tenants have. I mean, there's no beating around the bush. The consumer in South Africa is under extreme financial pressure, and the little bit of reprieve that we've had in interest rates has made a bit of a difference. But I don't believe it's enough difference for what we're going to need in the market to start seeing some shifts in consumer behavior. So I think a lot of that needs to change. But so affordability, and with the affordability, basically just comes rental collections and arrears and managing that. And as an agency managing rentals, you did touch on how models and how things are changing, and is technology a key thing? I think more and more we all know that technology is a key part of everything we do. It's not there to replace what we do, but it's there to enhance what we do in back office, and at the same time to give our consumers a better experience is really what one needs to try and touch on. So yes, a lot changing, and when we talk about landlords changing models, Neil, I wouldn't say a lot is changing, other than what we are seeing in certain areas. And I know there's been a lot of noise around it. I think Estiani touched on it, the short-term rentals. So, I mean, you've got it down there in the Western Cape, where there's been a massive drive with property investors that own properties in key Cape Town areas and other coastal areas, where they've reverted to short-term rentals and not long-term rentals, just to get better returns. So it has created a lot of controversy, where the residents in the city are battling to be able to afford to live in those areas, and they're having to move further and further away, which is creating other uncertainty and complexities in the city, from traffic congestion and things like that. So yeah, that's really what we're seeing in the rental market at the moment. It's an exciting place, and I think there's tons of opportunity that's lying ahead for us in the year ahead, particularly if we're going to see interest rates either stay flat or drop further. I think we're going to see more and more investors jumping into the market.
Wonderful, and we hope that happens. Thanks for sharing that for us, Paul. Theo, I want to pivot the conversation a little bit. I mean, you're a tech company, so we cannot have a conversation with a tech company without talking about AI. So maybe let's talk about, how is AI being implemented with private property? I mean, how are you personalizing the user journey, improving the discovery of properties for buyers and tenants? We'd just like to hear a little bit about what is the cutting edge or in the pipeline in private property side.
Yeah, so Neil, I'm sorry to say that AI isn't necessarily going to change what we focus on from a portal point of view, because I'm sure, as you would know, with technologies, technologists such as us that work within private property have adopted them super early. And I mean, going back 15 years ago, the portals were already utilizing machine learning and, data collection. Big data was the term at those days, to be able to build predictive models and to do things like recommendation engines and, smartly deciding on which properties to try and match with the consumer. So AI doesn't change that. And that has been happening for a very long time already. I think that, the large language models that have come into popularity, I think, in the consumers' minds, those are just there to help fast track some of the initiatives that have already been going and maybe enhance them a little bit. But I know you want to know some specifics, but as you know, this is a very public forum, and I can't really talk too much about what we're busy with. But we're just continuing with more of the same. Those elements have existed for a very long time, using machine learning, and we're just continuing to enhance those elements.
Awesome. So we'll end up with saying like, watch this space.
There we go.
It's all happening in the background there. So Estiani, let's just talk about some of the uncertainties in the market, and I think you so eloquently showed us what's happening in the markets, and it's always interesting to see where they're happening. How can investors, homeowners prepared, and unfortunately I want to bring in this thing because it is hanging a little bit over our head, the political uncertainty. We've had the Expropriation of Land Act. We had a webinar just over a month ago. We had 280 odd people on the webinar. They were all panicking and wondering, do I still own my property and all that kind of stuff. And land reform, property rights. So maybe just talk, and I know just from your advice for mitigating those kind of risks, because investors, homeowners, investors want to grow their portfolios. Your thoughts around that?
So again, I think for me, it's around access to information and making informed decisions. So certain elements, such as you've mentioned, the Expropriation Act, those kind of things, I think will never go away. It's also not a new piece of legislation. It's been enhanced or changed, but it's not a new introduction into the market. So that's always been there. And I think if my sentiment would be that if that was a hampering or a barrier for people to invest in real estate, it would have indicated that very long time ago already. So I don't necessarily think that is a massive barrier, but I do think that people need to look at, specifically investors, is first of all to understand, strategy, what they would like to acquire or obtain in terms of their investment strategy, and then using data and analytics to their exposure to make those right decisions. Yes, there are instances within the country where people are actually having to go through what we call negative sales. So meaning that people need to actually sell for less than what they've purchased. And I think in those instances, in many times, it is just ill-informed buyers at that specific point in time when they did make the purchase. So yes, there are instances where, you may have properties bought that are maybe just overinflated in terms of pricing. So if you use the data available within the markets and within the industry, I think you can very much build a very successful property portfolio, however that structure looks like. We've spoken about short-term rentals, long-term rentals, cash flow, and there's various strategies that you can implement. There's also an analysis done which showed that within, I think, the last 50 years, there's only been about 3 years where property had a negative in inflation or a negative growth. So yes, it's for me and personally, and maybe not Lightstone View specifically. For me, it's always been real estate because I feel it's a safe environment. People needs to be housed. We have a shortage of stock in the country. So yes, I think there'll always be opportunity within real estate to run a positive portfolio at least.
Spoken like a true investor. Wonderful. I love that. And of course, another investor is, of course, Paul Stevens, besides in his own capacity, besides running a very successful property agency. So Paul, maybe just look ahead to 2025 and beyond. What is the one opportunity you perhaps see in the South African property market you believe is underappreciated or underestimated?
Neil, thank you. And I think just of what Estiani said just now, when we were talking about expropriation, because this is a very hot topic. And, I think big thing is don't focus on the headlines and panic, stick to your strategy. That's, I think, a key thing for all of us to try and take away from this. But opportunities that I see out there, Neil, I think as investors, there's still tons of opportunity in South Africa. We've got a massive people that are, call it urbanization, moving from rural areas into populating the urban areas. And if you are investing in the right segment of the market, which is affordable housing, there's always going to be tons of opportunity there. Focus on cash return properties, I think is a key thing. And again, I did make mention of it a little bit earlier, is focus potentially on new nodes that might potentially be springing up, and not just the big node that a lot of people are eyeing at the moment is the Western Cape. But where are things going to spring up on the peri-urban sort of areas? So even if you go Western Cape, go and focus on the areas outside of your big Cape Town city. So where the little areas around that are starting to spring up, that are on the right road routes, and even beyond that. I spoke about the secondary cities, the places like George. Estiani was talking about Limpopo. I mean, Western Cape has had rental increases of 11% this past year. Limpopo has seen 10%, second highest to that. So not just property prices increasing, it's also had rental increases. So look at areas that aren't in the eye of everyone else, because I think there are still good returns to be had there. Cities like even Port Elizabeth, George, I mentioned just now, and around George, you've got that whole Mossel Bay area where there's a massive people moving in, good returns to be had from a capital growth perspective, and return on your investment. So yes, I would say those are the areas to focus on. And maybe if you are worried about policy and politics, is also spread your risk a little bit, and don't just be in one sector. Spread the risk a little bit, and whether you're looking at offices, industrial or commercial, spread it around a bit.
Awesome. Thanks for that. Theo, I'm going to ask you a question, then we're going to move on to some of the Q&As from the audience, and then we'll do our final wrap. I can't believe where the time has gone. So Theo, I mean, despite the challenges we discussed now today, I mean, what really excites you about the future of South Africa's property market? I mean, why should buyers, investors, property practitioners remain optimistic about what's ahead?
Well, Neil, I think that the asset that we sit on, or the potential assets that we sit on are still really undervalued when you look on a global index. I won't remember the data specifically, but it was something along the lines of South African cities, including Cape Town, it was on the list. On average, people had to pay 5 annual salaries to outright own their home. Whereas other emerging markets, it was something like 136 annual salaries. So we are very, very, very much still affordable. Yes, the luxury and high end is maybe unreachable for the average South African. But if you look at the average property price, as Estiani mentioned earlier, of 1.21 million, that's the average. So there's a lot of homes that are priced below that. That affordable housing market, there will still be a lot of action to come, because people can still afford to buy those homes, and a lot of people need homes. So we're going to see a lot of action coming from the market. And that for me is exciting. It's a prospect for any investor to consider getting into the market as a result of that, because the demand is not going to go away. It's just going to continue and fuel on. We're still affordable. It's a beautiful country. Anyone that comes in from the outside, wants to stay. As a result of that, we're going to keep seeing South African prices going up, I believe, over the years.
Yeah. I think wonderful way to put it. You said it so eloquently. Okay, so what I'm going to do is I'm going to jump into some of the questions. And if there are additional questions from the audience, please fire away. Don't be shy. No such thing as a silly question. The first one seems to be a data question there, Estiani. And I think it was while you were presenting your stats, Johan actually asked, Western Cape will probably overtake Gauteng soon. And he's probably talking about growth, and he's talking about property prices, etc., or the volumes. Do you want to maybe just give us your take on that?
Sure. I don't necessarily think that it will overtake Gauteng soon. There's still, if I remember correctly, if we're talking about proportion, there's about 34% of property sitting or based in Gauteng, whereas there's about 25% in the Western Cape. So I think the proportion therein is still sizable. And also, if you're looking at new stock being brought onto the market, there's also majority being brought onto the market within Gauteng. Value, obviously the majority of the value sits in Gauteng based on the volumes also. So maybe in terms of value for certain sectors and certain areas, we can look at, Western Cape overtaking Gauteng in that aspect. But I don't think from a entire province point of view, it will happen soon. I may be wrong, but not if I look at the data and the stats and the trends over the last 25 years. Don't think so.
The data never lies. As I said, it's lies, damn lies, and statistics. But yes, we certainly believe that in terms of the volume of properties in Gauteng, it shouldn't change. So it makes all sense. Thanks for that, Estiani. There's a doubtful person in the room over here, and I think maybe, Paul, you can maybe respond to that. It's from Mark, and he says, you keep saying that growth is so great, but it's below inflation or barely above it. And this is just preserving buying power, but not growth, especially not great growth. What am I missing? Who would like to comment on that? I think, Paul, I'll give you a crack. I don't know, Estiani, if you would also like to comment on that. And Theo, you're welcome to join in too.
No, I think Mark's question is very relevant, because if we take inflation, I think currently we're sitting at 3.2 or 3.4. Just reading the other day, I think there was two different numbers put. This is February's inflation numbers. So, Mark, we're not far off that. So, yes, is the word great growth in property right? And again, this is averages. So you've got to take certain nodes into account where there has been significant growth above that. And I'm not going to list the sort of places, but I mean, there's some that have absolutely almost been triple what that number is. So you've got to, as a property investor or property purchaser even, try and ensure that you're buying in the nodes where they are expecting further growth and that will potentially surpass the numbers that have been shared by Estiani, because there are areas that do have significantly greater growth than that. But is that 3% shooting the lights out? No, it certainly isn't. It's stable. It's if you look at property ownership, whether you're an investor or a home buyer, it's the long game. It's all about the long game. And I think that's all in the numbers. It's all about looking at the numbers in the long term and not something that you're going to flip in the short term, because unfortunately those days, as Estiani actually referred to, was the days that her and I got going where things were increasing on double digits. And those days are gone. So you've got to jump into property for the long game.
Okay, I think
you're gonna.
Yeah, sorry, Paul, carry on.
No, I was going to say you can expand on that if you can, Neil or Estiani.
Yeah. So Estiani, what I want to do is to you can expand on that question, and then I just wanted you to answer in concurrently with that one. Your response is, where are the most developments taking place, which I think is a very relevant question from Johan, because that obviously gives investor and sentiment and confidence in different markets. And is it influencing the migration of investors? Because we are seeing a lot of new developments in the Western Cape, and we are seeing also in George, and we're seeing in Mossel Bay, but we're also seeing in Gauteng. So maybe your comments to what Paul was saying, and then obviously to the development story.
No, I absolutely echo what Paul is saying. Yes, inflation, and I think we all understand also the concept of real inflation, where things are actually increasing with way more than 3%. But again, there's areas and there's certain property types and property sectors that are actually yielding great returns, far above the 3%. And those are the areas where the opportunities lie. So I echo 100% what Paul is saying. And then also the stability of growth. Again, any properties and investment opportunities, an investment vehicle. So there will always be risk, but I think the risk may be a little bit lower than other opportunities, such as stocks or those kind of things, which are a little bit more volatile. In terms of developments, I don't necessarily have a view in front of me at the moment in terms of where most developments are, but I think the developments that the participant may be referring to, there's different developments also going. I've mentioned earlier that there's quite a big need in terms of the retirement space. So we see quite a lot of retirement opportunities popping up in the markets, and then also student student accommodation. That's also something that I think is, there's a big shortage of, specifically around the educational hubs. So yeah, I think those are the opportunities to look out for. But again, in all of the provinces, as you've mentioned, Neil, Western Cape, Gauteng, there's definitely new developments being brought onto the market regularly.
Excellent. Good. All right. So I think we kind of can't believe that we've reached the bewitching hour. It's been a very interesting conversation so far, and we've managed to unpack some of the insights. So I think just in closing, what I would like to ask each panelist is to maybe give us your closing parting shots. I mean, we do have a lot of uncertainty and political uncertainty in the market. I mean, we got a pending VAT increase. We don't know. One day it's on, next day it's off. One day it's on, next day it's off. And we have, and it's put a lot of uncertainty into the markets. And then, of course, it seems it is going to go forward. But certainly, we also got the tariff issue from the US tackling, and our relationship dwindling with the United States, which is not helping. Certainly we've seen the rand dollar lose significant, in fact, record losses, which doesn't bode well for future in our market. But despite that, and I think you gave really, really, really good advice. And what I would like to leave on is on a real high note from each one of you, is to say, to leave the audience here today with something, really positive, something they can use, something that they can take forward and say, hey guys, it's all good. This is why. Or, leave your parting shots, your thoughts. I'm going to start off with you, Estiana, because you did it so eloquently when you started. So I'm going to ask you to finish. I'm then going to ask Paul, and then finally Theo, last but least, and take it from there. Over to you, Estiana. Your closing thoughts.
Thanks, Neil. For me, it would be, property it's not a want, it's a need. So, within our country, I think it's the one thing that we all have in common. We need housing, we need a place to stay. And there are creative ways of obtaining that. So, again, I don't think it's a market that will ever go away. It may change, it may yield new opportunities, but it is something that we will forever have opportunities in. So that would be my sentiment.
Is that it? Flat, your story is 8. Thank you very much, Tiani. Okay, so Paul, your closing parting shots to the audience, and we still have 60-odd people here. So your thoughts on that, please?
Yeah, I think we've touched on property a lot, and I think, I briefly said it, don't get caught in the noise. There's a lot of distraction out there. Focus on the positive. I think we live, echoing Theo's words, we live in an incredible country that I think is still undervalued property-wise, lifestyle-wise. We were touching on lifestyle estates, but there's no place like this to live. We've got a growing demographic, a growing market for what we're talking in our relevance to property, whether you're somebody that's developing, or an investor, there's lots of tenants coming in, there's lots of buyers coming in. So there's great opportunity, I think, for those of us that have hung around here and those of us that are willing to withstand the noise and the uncertainty that's out there. We live in a country of wonderful opportunity.
Awesome. I think great way to finish there, Paul. Theo, you got the last word. Your final parting shots to the audience out there.
To the audience, maybe a quick shout out to Johan Lotte, who said in the comments and questions section that he uses private property each day as an agent to get his message out there. Private property is a wonderful platform. It's an evolving platform. And I encourage more of you to give us a chance and check out the website and our applications, etc. There's a choice for everyone, and listings from every segment of the market, the affordable housing market, the luxury market. And we're attracting buyers from around the country and from all over the world. So give private property a chance. You'll find a perfect home there. And, we've got a choice for everyone.
Awesome. Thank you. Great way to finish. Huge thank you to all of our panelists, Estiani, Paul, and Thea. Wonderful having you all on board. Thank you for joining us and your invaluable insights. And anybody wants to reach out to any one of the panelists or REI, you can either mail info@rei.co.za or click on the link, or reach out directly to Private Property. We got the two CEOs, the heads of the company, all of Just Property, doing a lot of rentals and sales, and Theo is obviously doing lots of the listings and with lots of exciting stuff with AI. And Estiani has incredible data that we need to. So please reach out to any one of them. I just want to say before we wrap up, I just want to remind you of our next webinar. It's going to be next week, Wednesday, because we've got a long weekend. We've got 2 long weekends coming up. From Friday, so Easter weekend. So it's going to be on Wednesday, the 16th of April, not on Thursday at 12 o'clock. And we're going to be talking about expert strategies for property management, mastering residential, student, and commercial real estate. So it's not to be missed. You can register. There's a link in the chat box, or you can go to the rei.co.za homepage and you can register on the website there. So please join us again like you have today. So shout out just to our audience. Thank you for joining us here today. Thank you for your questions, your engagement. Has also made the session valuable and impactful. And we really appreciate your time and participation. And we hope that you're walking away with actionable insights and fresh perspective to elevate your real estate strategies and for your businesses. Once again, a great insightful webinar. This is Neil Peterson signing off alongside our expert panelists, Paul Stevens, Theo Mseka, and Estiani Marks. Wonderful having you all. Until next week, Wednesday, we wish you all the success in your property journeys. Happy investing and goodbye from us all. Thank you, everybody.